looking at the Kenyan market, it posted an impressive gain last week. What did you make of the bourse's performance?
I think the performance was purely based on the fact that over the last few weeks there had been a contraction, especially after the earnings seasons. So I think investors were coming back after all the euphoria settled down to take positions. However, going forward, there could be a few drawbacks to the current, the rally could lose some of its legs, primarily as a result of the weekend's announcements of fuel prices that will weigh heavily on investors' minds, especially as it could usher in a second round of inflation and probably even a second round of monetary tightening. So I think going forward, there are few headwinds that will face the current rally.
Few headwinds that could face the NIC 20 going forward. What stocks are you looking out for this week?
I think this week and basically going forward, there are a few counters that still show some value. I think we've seen car in general being oversold at the moment. It's selling at a very low price to earnings ratio, and going forward, it could be a source of value as there's still some potential. It's still primed to take advantage of increased urbanization, population growth, and the fact that investment in the subcontinent has grown, in the sub-region has grown. So I think car in general for me is something for long-term value. I think Pan-African Insurance Holdings has also been oversold, and we are expecting to see some reversal to the investment income losses that it realized last year. And the other thing is that there's restructuring that portfolio to be less exposed to equities. So I think those two are good stocks. And on the banking side, we still see some value in KCB, and even KCB and equity, even if they've shown a lot of price appreciation over the last couple of weeks or so. But I think they're still selling at single-digit Ps, and I think they're very good long-term plays in this market.
What about a stock like East African Portland Cement, which saw a jump of about 7.1% on Friday's trading session after resuming trade? Yeah. Are you perhaps on the camp that that stock is perhaps not going anywhere going forward?
I think, it is exposed to the fast-growing construction market, and I think results that came out last week is that construction growth are still increased on the back of foreign inflows of cash into the Kenyan market. So I think cement manufacturers have fared well. Nonetheless, I think there are two issues still weighing heavily on the company. First one is corporate governance that is still on shaky ground, as the issue of the true shareholding of the company is yet to be resolved in terms of whether the government can actually claim a stake to 51% through its NSSF holdings. And secondly is the fact that the free float of the company is not good, and the liquidity therefore suffers. And I think in a company where there are such headwinds or such clouds hanging over it, you'd want to be in a liquid counter. So if anything adverse happens, you sell off quickly. But that's not the case with East Africa Portland Cement. Now,
looking at the shilling, it has found some support given the fact that the central bank have been mopping up liquidity through repurchase agreements. Could we perhaps see this trend in the strength in the shilling continuing into this week?
I think going into the week is the fact that on an absolute basis, the fact crude prices are rising, and therefore the import bill from an energy perspective will be much higher, and that will weigh heavily on the shilling. The central bank, from that perspective, therefore has to tighten much more aggressively than they're doing to support the shilling. And in the long term, that's not a good move, because what you're giving artificial support to the shilling. Therefore, I think the bias now towards the shilling is more of weakening rather than strengthening against the dollar.
Now, looking at interbank rates, we have seen the central bank also coming into the market really to mop up liquidity in a bid to also lower those interbank rates, which have been quite volatile. We've seen them reach levels of about 10.3% in last week's trading session, but back up to 13%. What did you make of that? What are you making of that volatility within the interbank space?
I think the whole fixed income interest rate environment is rather disjointed at the moment. We have the CBR at 18%, we have T-bill rates at 16%, You have the interbank at 13%, at times 24%, and you have lending rates in their 20s. Therefore, there's a bit of disjointment in terms of benchmarking interest rates and the general interest rate environment, partly or chiefly because as a result of last year's interventions by the CBK. What they did is that they changed the reserve requirements as well as the reserve reporting requirements from some part weekly and part monthly. And therefore, in the interbank market, it's become very difficult to tell what your counterparty's liquidity position is, and therefore that obviously will result in a significant premium, and that's what we've been seeing in the interbank market, and part of it has been filtering through into the fixed income markets such as T-bills and T-bonds. And therefore maybe the CBK needs to look at that piece of regulation and at least make some consistency in reporting, that you have either daily and monthly reserve requirement reporting, because that will solve a lot of the disjointment you've seen in the market.